Welcome to The Explainer. Today, we're cracking open the playbook of AI lender Upstart. We're going to use a recent investor Q&A to really get inside the head of their system and see exactly how its AI thinks, how it grows, and how it plans to win in a super competitive market. All right, here's what we're diving into. First, we'll look at the core engine, the AI brain itself. Then, we'll see how humans are still involved in steering the ship. After that, we'll unpack their strategy for getting back to growth, look at a huge decision they made about their brand, and wrap it all up with their long-term secret weapon, the data arms race. So, first up, let's talk about the AI model. How does this learning machine actually learn and adapt to a world that's constantly changing? Now, this isn't just some thought experiment. This literally happened. When the government hit pause on student loan repayments, it created this massive shockwave. So the big question is, if you're a model that runs purely on data, what do you do when the world suddenly changes the rules overnight? Well, the key is the philosophy behind their AI. See, it's not programmed with old-school rigid rules like, if this happens, then that must happen. Instead, it's what they call a fully general solution. Basically, you don't give the AI a rulebook. You just give it a fire hose of data and let it figure out the patterns for itself, even if those patterns are things no human would have ever expected. And here's how that actually played out. The system saw millions of people suddenly stop paying their student loans. Okay, that's a new pattern. Then it asks the really important question, does this new behavior correlate with a higher risk of them defaulting on other stuff, like an Upstart loan? If the data says yes, it does, then boom, the model automatically adjusts pricing to reflect that new risk, all on its own, no human needing to step in. But wait, it's not like the humans have just handed over the keys completely. The AI might be driving, but there's definitely still a human with a hand on the wheel. Let's look at how they steer this thing. They've got a really clear philosophy here. Think of it this way. On the big picture macro level, the humans add a safety buffer. They basically tell the AI, hey, the world looks a little stormy right now, so be a bit more cautious than you normally would. But on the micro level, for specific events, like that student loan issue, they let the AI do its thing. They don't micromanage. And at the end of the day, it's because they trust the data more than a gut feeling. This quote really says it all. They believe these models are incredibly good at finding complex patterns that humans just can't see. So they only step in for the really massive system-level risks where they have a super strong, data-driven reason to tweak the whole system settings. Okay, so you might be thinking, if this model is so smart, why isn't business just exploding right now? Well, this next part explains their game plan for growing, even when the economy is tough. A huge piece of the answer comes down to this one single number, 1.49. So what on earth is this, and why does it matter so much? This is what they call the Upstart Macro Index. It's their internal gauge of how much financial stress the average person is under. A score of 1.49 means the AI is seeing data that suggests the risk of default right now is a whopping 49% higher than the normal long-term average. The environment is just riskier. And that risk creates a kind of double whammy. First, because there's 49% more risk out there, loans naturally have to be priced higher. But on top of that, you've got investors in this high interest rate world who are demanding much higher returns. Both of those things push loan prices up, which, means fewer people get approved and fewer people accept the loans. And this is the absolute key to their strategy. They are not just sitting around waiting for the economy to get better. For them, growth comes from one thing: making the model smarter, day in and day out, because a smarter AI can find good borrowers that everyone else misses, which means they can approve more people safely. That's how they plan to grow, no matter what the economy is doing. And that relentless focus on model improvement, well, it actually explains a huge strategic choice they made. Why bother building a big consumer brand like Upstart.com? Why not just sell their tech to banks and operate in the background? Look, they had a fork in the road. If they were just a software provider, their speed of innovation would be stuck in the slow lane, totally limited by how fast traditional banks are willing to move. But by building their own brand, they control everything. They get way more data, and they get it way faster. And data is the fuel for their AI. This quote right here, this is the entire company philosophy boiled down to one sentence. In the world of AI, it's a race, and the winner is whoever can learn the fastest. So owning the customer means owning the data, which means you control the speed of learning. It's all about getting smarter faster than anyone else. And that choice, to build a brand, to learn faster, seeds directly into their ultimate competitive advantage, how they win the data arms race, especially when they launch new products. When Upstart rolls out something new, the AI isn't a genius on day one. It has to reach what they call a training data quantum. It's a cool phrase, right? Think of it like learning a new language. You can read the textbook, but you're not fluent until you've had a ton of real conversations. That's the training data quantum. It's that critical mass of real-world data the AI needs before it can really unlock its potential. So here's the playbook. They launch a new product, small. They often use their own money to fund the first batch of loans, just to quickly gather that critical quantum of data. Once the AI learns enough and hits certain performance goals, that's when they unlock it and scale it up, applying all the powerful techniques they've already perfected in their other businesses. So when you put all the pieces together, it becomes really clear. Upstart is making one giant bet that the ultimate competitive advantage, the only real moat in the age of AI, is the speed of learning. Their entire strategy is built to feed that learning machine, and it leaves us with a really big question. In a world that's going to be run by AI, does the company that learns the fastest simply win?